Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 26th, 2026. Let's dive in.
It looks like Wall Street is waking up to a sea of green this morning. Following a bit of volatility earlier in the week, the GIFT Nifty is currently signaling a very optimistic start for our domestic indices. We're seeing GIFT Nifty trading around the 25,669 level, which is a premium of roughly 41 points over the Nifty Futures previous close. This suggests that the Nifty 50 and the Sensex are both poised to open with a healthy gap up. Now, looking at the internal movers, we're seeing strong sentiment in the heavyweight IT and banking stocks, largely riding the coattails of the global AI relief rally. In the F&O space, the cues are pointing toward a bullish bias, though we should note that high expectations are creating a bit of a perfection requirement for earnings. CLSA has actually issued a note of caution regarding Indian small caps, suggesting that elevated valuations might limit the upside and increase the risk of earnings downgrades. So, while the headline indices look set to soar, the broader market, especially those smaller, high-flying stocks, might face some profit booking if they don't meet these lofty expectations. We'll be watching the 25,700 resistance level for the Nifty very closely today.
Moving over to the international stage, Joe, it was a historic night and morning for global markets. In Asia, the Nikkei 225 has done something truly remarkable. It crossed the 59,000 mark for the first time ever. This is being driven by what traders are calling the Takaichi trade, as the market reacts to new central bank board picks in Japan. Over in the US, Wall Street snapped a losing streak, with the S&P 500 and the Nasdaq hitting two-week highs. This was almost entirely driven by the anticipation and eventual delivery of Nvidia's earnings, which we'll get into shortly. In Europe, the FTSE 100, DAX, and CAC 40 are all expected to follow suit, tracking the overnight gains from New York. However, it wasn't all smooth sailing in the commodities world. We saw a major technical glitch at the CME Group, which actually halted trading for U.S. natural gas and metals futures for over half an hour. It's the second major disruption in a month, which is raising some eyebrows among commodity traders. As for currencies, the U.S. dollar index has softened a bit as investor confidence returns, while the Japanese yen saw some gains as the Bank of Japan hinted at potential rate hikes down the line. Gold is also edging higher, currently trading with a positive bias as traders weigh geopolitical tensions against these shifting interest rate expectations.
Coming back to the Indian corporate landscape, we have some fascinating narratives unfolding today. First up, the legendary investor and billionaire Ramdeo Agrawal has made some waves. While he's historically been one of India's biggest bulls, predicting the benchmark index could triple over the next decade, he's now warning that the current stock boom is primarily benefiting the elite and could potentially hurt the broader economy if the wealth gap isn't addressed. It's a sobering thought amidst the market rally. Staying with the caution theme, CLSA's report on small caps is the talk of the town. They are warning that the high expectations bar is now so high that any slight miss could trigger a cascade of downgrades. This is particularly relevant for Nifty 50 investors who have been diversifying into mid and small caps for higher alpha. In other news, we're keeping a close eye on the energy and metal giants today. With the CME glitch affecting global metal pricing and Zimbabwe recently banning lithium concentrate exports, domestic players in the EV battery supply chain and miners like Vedanta or Hindalco might see some price volatility. Finally, keep an eye on the heavyweights like Reliance and HDFC Bank. They'll be the ones doing the heavy lifting if the Nifty wants to sustain that 25,700 level today.
Across the globe, the corporate news is dominated by one name, Nvidia. Jensen Huang's powerhouse reported a staggering 75% growth in data center revenue, and their forecast for the next quarter blew past even the most optimistic analyst estimates. They also introduced the Vera Rubin chip platform, which Jensen says will prove the markets wrong about AI spending cooling down. It's been a massive relief rally for the entire tech sector. However, it wasn't good news for everyone. Salesforce saw its stock drop in after-hours trading. Despite solid results, investors are terrified that AI will eventually disrupt traditional enterprise software models, a scare trade that seems to be decoupling stock prices from actual fundamentals. In Australia, Qantas Airways took a hit, with shares falling the most in nearly a year after earnings from their international unit shrank, coupled with rising labor and maintenance costs. We also saw Marks & Spencer announce they are exiting the Philippines after 40 years, citing a major shift in consumer retail preferences. And in the rare earths sector, Lynas reported a surge in profit but still missed heightened analyst expectations, showing just how sensitive the market is right now to any deviation from perfect growth.
On the macro and geopolitical front, things are getting complicated. A major U.S. Supreme Court ruling has essentially upended the president's authority to unilaterally impose certain tariffs. While President Trump insists that trade deals are safe, global partners are increasingly skeptical, and this has stalled several high-level trade talks. This uncertainty is part of why we're seeing the U.S. dollar lose some of its recent strength. In India, all eyes are on the RBI's next move. While the U.S. Fed remains in a wait-and-watch mode, we're seeing a hawkish tilt in other regions, like Australia, where a surge in renewable energy investment is keeping their economy hotter than expected. This global, higher-for-longer interest rate environment makes the RBI's job very difficult as they try to balance growth with persistent inflation. Also, keep an eye on the Middle East. Gold is rising again as Iran nuclear talks and regional tensions remain unresolved, which typically puts pressure on India's import bill through higher oil and bullion prices.
To wrap things up for our listeners, here are the key takeaways for today, February 26th. First, expect a positive opening for the Nifty and Sensex, fueled by the global Nvidia relief rally. Second, the Nikkei's climb to 59,000 signals a massive shift in Asian capital flows that could spill over into Indian markets. Third, be cautious with small caps. The valuation air is getting thin, and institutional investors like CLSA are starting to signal the exits. Fourth, watch the tech sector. While Nvidia is the king, companies like Salesforce show that the market is very nervous about who AI might leave behind. And finally, stay tuned to the commodity markets. The CME glitch in Zimbabwe's lithium ban mean we could see some erratic moves in metals and energy today.
That wraps up today's update. I hope you gained useful insights to navigate the markets today.
Add your thoughts in the comments and follow for more such updates. This is Sarah.
And Joe, signing off. Happy trading, everyone.